Hey y'all, this is Nikki Winston. Welcome to episode 4 of the WERKin Mommas podcast. I love to talk about accounting, taxes, and small business tips that entrepreneurs need to know. The topics I'm discussing are those that female founders have told me they want and need to know about. If you have a topic about small business finances, accounting, or taxes that you want to know about, send an email to hello@nickwinston.com and I'll do a podcast on the topic that you choose. Today, we are going to talk business taxes. Everybody wants to know about taxes, specifically how not to pay any. There are many ways to structure your business in a manner that allows you to qualify for certain tax credits and deductions. And there is so much more to tax planning that most entrepreneurs aren't even aware of. From a financial statement standpoint, income tax expense is at the bottom of your profit and loss statement. So there are so many other accounts, your revenue, your cost of goods sold, your operating expenses that you can address before you even get to taxes. So as an accountant, I'm going to break this down for y'all in a matter that even non-accountants can understand. As a business owner or a freelancer, you should have some basic knowledge of taxes. But first, this episode is sponsored by the Winston CPA Group. We provide accounting and tax support for small businesses and entrepreneurs. Many entrepreneurs have great business ideas, but have no idea how to maintain their books, create standard processes, and optimize their cash flow. We also prepare candidates for the CPA exam with coaching, tutoring, and real-life application of accounting concepts. Visit us online at www.nickwinston.com. This podcast is for your educational purposes only. Listening to this podcast, subscribing to a list, or downloading any free resources does not constitute a business relationship of any kind. To get your specific accounting and tax questions answered, you may book a consultation with the Winston CPA Group online at www.nickwinston.com. Okay, y'all, we got the formalities, the housekeeping, and the CYA out of the way. So first I call this episode tax planning, but that encompasses way too much. Like that's too much to fit into one episode. Tax planning deals a lot with strategy, long-term planning, and having to review your financials to understand your current tax situation, and then put a plan together to get you in the best tax position that works for you. You just know that tax planning needs to be a part of your overall business strategy throughout the year, and not just from January 1st through April 15th. That's only the tax filing season. There's still work that needs to be done over the course of the whole year. But I'm going to focus this conversation on tax deductions, which is what most of y'all have told me y'all are interested in knowing about. Deductions for your business or your side hustle, and how to minimize your tax liability and have a stress-free tax season. So we're going to talk about saving y'all some money right now. Hold on, I got my lemon water. I'm on my yoga ball. It's the middle of the day, beautiful, hot, sunny day in the ATL. Anyway, so the first thing to understand are the different type of taxes that are applicable to your business. Everybody talks about income taxes, but there's also sales tax, there's excise tax, state and local tax, self-employment tax. And all of those rules can vary depending on the state that you live in, the type of business structure that you have, and the industry that you operate in. And I think back to the days of running my trucking company where we had certain taxes that we had to pay, excise taxes and things outside of the normal income tax or sales tax that most companies think of. So if you're in an industry like trucking or manufacturing, or you make a product, then you're probably susceptible to these additional taxes and you may not even be aware of it. So it is important. It's something that entrepreneurs need to think about from the very beginning of starting your business. Even when you establish your business as an LLC or an S Corp, a partnership or a sole proprietorship, there are different tax implications there depending on which structure that you choose. So I won't delve into these particular topics because they can be dry and complex, talking about an LLC and a partnership and operating agreements and all that stuff. So if that's a conversation that y'all want to have about business structures and digging into that, and y'all want some intel on it, let me know. Shoot me an email, hello@nickwinston.com, and we'll talk about it. But like I said, let's get to the taxes, the deductions, and talk about the basics. So I do want to also bring freelancers into this conversation. The taxes for freelancers and business owners are kind of the same, but those of you who may have a full-time job, but you do some things on the side, if you're an Uber or Lyft driver or Instacart shopper, if you do photography on the side, any business activity, I cannot talk today, where you receive a 1099 instead of a W-2. There are tax implications there that you need to be aware of. So the goals as a freelancer, entrepreneur, business owner, whatever, is to, number one, make sure that you're taking advantage of any tax benefits available to you. And number two, that you are not left with a huge tax bill at the end of the year. So some of the most common deductible expenses for a business, if you work from home, if you do any type of your business from home, maybe your administrative stuff or something like that. An added benefit of working remotely is that you can use certain expenses in your home and deduct them on your business return. So if you have an office or some space that you have dedicated solely for working on your business. I'm not talking about the dining room table where you laid out the products and the bottles and the shea butter and that's where you make it. Not that, because aside from making products there, you also eat dinner on that table. So that's not the only activity that's done there. So you can't deduct that. However, if you have a home office, um, and all you do is work in there, then if you rent your home, if you own your home, your rent or mortgage payment, your insurance, your property insurance taxes, your HOA fees, your gas, electric, your water, your internet, anything that you use in your home that is specifically related to your business can be a deductible business expense. Now, there are some ways to go about it, some things that um, you need to adhere to as far as the IRS guidelines. You have to understand how much of your office space, from a square footage standpoint, how much of that is your total home, if I said that correctly. So if you have, for example, a home that's 2,000 square feet and your office is 200 square feet, then your office occupies 10% of your home, which means 10% of your mortgage, your insurance, your utilities, your internet, all of that becomes a business expense and is deductible for you on your tax return. Also, the cost of your website, your platforms, if you're using Wix or Square or any other online platform where you host a website or you sell things, the cost of those services are tax deductible. This can also include apps and subscriptions that you use. For example, I use Dropbox where clients can upload documents. I also use DocuSign if I need to sign something or if I need to send agreements or something to clients, I can just do it off of my phone. So using any type of app to schedule consultations or meetings with clients, Calendly, Schedulicity, any of those, the cost of those are all tax deductible expenses. Office supplies. when you purchase cards for your business or you make flyers, anything to promote your business, these are tax deductible expenses. Also, thinking about basic things like notepads, pens, highlighters, calculators, equipment. Um, I know the new MacBooks just came out. If you purchased a new MacBook and you use it to grow your business or promote your business, then a portion of that MacBook or all of the MacBook, depending on how you use it, can be a deductible expense. So we know that those computers are expensive. I have one myself and a lot of other Apple products. So these things are beneficial in that, yes, you need a new computer. You might use it sometime for just surfing the internet or personal reasons. But if you're also using it for your business, then you can deduct a portion of the cost for that on your business tax return. I hope that these are reminders for y'all. Some of these may be new, but I hope that you guys are currently working with a CPA or a financial partner, fractional CFO, or somebody who is well versed in small business accounting and that they have already made sure that you were able to take full advantage of the tax deductions that are available to you. If not, shoot me an email. Glad to talk to you. Glad to give you some pointers. But I hope that some of this is new, but some of it, if you've been in business for a while, that these are familiar to you. If not, I'm glad that I'm teaching you something new. More deductible expenses, professional association dues, continuing education. If you are a freelancer, for example, and you get clients off of Upwork, there's a fee that you pay to Upwork for each contract that you start. And the cost of that, I think, is they take like 20% of every invoice that you have. They take 20% as a finder's fee or whatever. The cost of that, I mean, over the course of a year, that can add up to a lot of money. So that's also a deductible expense. For me, I'm a member of the AICPA. I'm about to be a member of the Georgia Society of CPAs. So all these other professional associations that I'm a part of. Continuing professional education is also something that will be a requirement. Those can be expensive. So if you belong to if you're an HR consultant, for example, and you belong to SHRM or any type of industry related societies, the cost of those memberships are deductible for you. Tax prep fees. That we filed our taxes, or most of us filed our taxes last month on April 15th. The cost that you paid and the cost that you pay each year to get your taxes filed is a business expense, and you can write that off. Business insurance. This is a necessity. I find so many entrepreneurs that operate without insurance, and I'm like, what are you doing? This is the easiest way to go out of business, and potentially you lose your business assets and your personal assets, depending on how you structured your business. So business insurance, this is so important, so essential. If you do not have it, get it today. It's not that expensive. For less than $100 a month, you can protect your business, your ideas, and save yourself a lot of money and headaches. And you can also write this off as a business expense. So you're in a win-win situation. Phone expenses, particularly cell phone expenses. There's some fine print here with the cell phone. Okay. You can deduct the cost of the phone each month, the phone as the equipment, and the bill, the service each month, if the primary use is to conduct your business. Now, I have seen situations where a person has a personal phone, they start a business, and they start using the phone for both personal and business. You can do this as long as you can determine how your use of the phone is allocated. If you say, I use it half the time for personal and half the time for my business, then you can only deduct half of those costs, or 80% of the time on business, 20% on personal. However you decide to make that allocation, make sure you have the receipts, the phone bills to support that, and you can deduct some or all of those expenses depending on the usage. Meals. Before 2018, it used to be meals and entertainment, meaning that you could get creative with meals and entertainment and buy season tickets to a basketball team, and then invite your clients out. That way they can sit with you courtside, one of their favorite sports teams, and you can write that off as an expense. That's over and done with. Now it's only meals, and it has to be a business meal, not just because you're going to Starbucks and you want to hashtag today's office and you write that off. No, that's just you deciding to take your laptop and grab a latte from Starbucks, not deductible. However, if you take a client out for a meal, any lunch, dinner, breakfast that has a business purpose, 50% of that cost is tax deductible. So the other thing that I tell people to do is, if you are going to go to Starbucks and you're meeting with a potential client, or you're meeting with a vendor or something related to your business, then make sure that you specify that in your receipts, or make sure you have notes or some type of meeting on your calendar, or something that shows that you're actually conducting business while you're at Starbucks, and not just there to make a good Instagram story, which I've seen some good Instagram stories at Starbucks. Um, Health insurance. So this is a touchy subject for freelancers and entrepreneurs, but the premiums that you pay for health insurance, the premiums, the copays, the deductibles, those are tax deductible only if they exceed 10% of your adjusted gross income. In other words, for the business owners who are like, what the hell does all that mean? Unless you have gone to the doctor throughout the year for some type of surgery or major medical issue that you have going on, it's going to be difficult to meet this 10%. I would still say track it. You never know what happens, but there are a lot of stipulations around this, and this is one of the heavily scrutinized deductions. So make sure your paperwork, your receipts are intact when it comes to deducting your health insurance premiums as a freelancer or as an entrepreneur. Now, if you're a freelancer, or you have a side hustle and you work another job during the day where you're a W-2 employee, if you're eligible for benefits, then obviously those costs are not deductible, because those are employer sponsored plans. So again, would love to jump deeper into these topics. I think it's a little too dry and complex for the purpose of this episode, but if this is what you want to hear, this is what we will talk about. Along those same lines, retirement plans. Don't think that because you're a freelancer or you own a business that you don't have access to retirement plans, employee type plans like a 401k that a lot of you may be familiar with. You can set up a self-employed retirement plan called a SEP IRA. I believe you can contribute up to 25% of your earnings, or no more than 56 grand, I think, is the limit for this year. And the same limits apply if you have a business where you have employees. You can offer this as a benefit to the employees. So again, for the employeepreneurs, those of you who are W-2 employees with side hustles, you can also contribute to a traditional IRA or retirement plan. Just know that your deduction for this particular plan is going to be reduced by whatever you may have contributed to a SEP IRA. And so this can get complex, just talking about retirement plans and the contribution limits and et cetera. So if this is your situation, you can contribute to a SEP like you would a traditional IRA. There's lots of literature and education about retirement plans for self-employed individuals. So if that's something that you want to delve deeper into, shoot me an email. I'll also direct you to the IRS website, www.irs.gov. They have a ton of information on this particular topic. Next, deductible expense. Your car expenses. If you have a car and you use it for your business, you can possibly deduct some things. How? I'm going to tell you how. I don't want anybody getting jammed up because you fucked up and you didn't keep good records. So if you drive around to meet clients or any use of your business, any use of your car for your business, you can deduct those expenses. If you are leasing a car, you're paying a principal and interest payment, that interest could potentially be deductible. The cost of your oil, your gas, your maintenance, your insurance, your tires, your vehicle registration, all of that, anything that is involved in operating your vehicle. And if it's used for a business purpose, you could potentially deduct those expenses. Again, employeepreneurs. This does not apply to those of you who have to travel for work. And when I say work, I mean for your day job, your W-2 9 to 5. There used to be a miscellaneous itemized deduction that traveling employees could take for any travel expenses that were reimbursed, but that is gone. That's no longer applicable after December 2017. And for those of you who work 9 to 5 and you have a side hustle, keep in mind that there are fringe benefits that your employer may offer, like company vehicles, for example. You can't use I don't think you can use the standard mileage rate here, but you can deduct the cost of driving the car. But again, the situation gets tricky from a tax standpoint when you're an employee and you have a side hustle, because there are benefits that you may have as a freelancer that might get canceled out because of your W-2. So it's just really important to talk with a tax professional or an accountant who can really talk you through some of these things. And travel. I saved this one for last because this one, kind of like the car expenses, can get bent around. And I've seen people really, really go there and really test out this particular rule. So if you fly out to meet a client or meet a vendor, you can deduct those expenses. I used to hear people talk about they booked a vacation and then they wrote it off as a business expense. Like, oh, I'm going to Jamaica for 3 days and I'm going to write it off as a business expense. Yes, you can do that, but it must be done so correctly. Let me give you an example. Let's say that you're attending a business conference in Jamaica and it's for 3 days. It's a 3-day conference, but you stay for 4 days because you want that extra day to just relax, just catch the whole Jamaica vibe. What you can do is deduct the cost for the 3 days of the conference, but not for that fourth day of your vacation. So the cost of your flight, your hotel, half of your meals, any cost that you incurred, even the conference fees, the registration fees, you can deduct those costs for the 3 days that you were in Jamaica for that trip. The important thing here is that the trip was primarily for a business purpose. So yes, you can frame it by saying, I'm booking a vacation and I'm writing it off as a business expense. But out of the 4 days that you're there, you only get to write off the 3. But receipts, keep your receipts, keep your paperwork and all of your documentation in the event that you're audited by the IRS, but also because it makes things easier for your accountants. So, one last thing I wanted to touch on is business structure. I mentioned it earlier in the episode, but I've learned that a lot of entrepreneurs set up LLCs because that's the thing, because their friend started a business and they set it up as an LLC. And that's really all we've been seeing these days with the new businesses that pop up. So I do want y'all to be aware there are other options like a corporation, lots of paperwork, double taxation, but then there's also partnerships, S corporations, and sole proprietorships. The benefit of an LLC is if you set it up properly, you can create additional tax savings as a self-employed person. So you'll pay the self-employment taxes because you work for yourself. And then if you set yourself up as an employee within your LLC, you will only have to pay half of the Medicare and Social Security tax. Whereas if you're simply an owner who owns an LLC, you're paying the employer side and the employee side of the Medicare and Social Security. So other ways that you can structure your profit, your salary, and only pay taxes on the part that's your salary. So let's say you earn $50,000 from your business. Instead of you paying taxes on $50,000, if you decide to take 20% of that, $10,000 as a salary, then you only have to pay $10,000 on the Lord Jesus, I cannot talk today. You only have to pay taxes on the $10,000 that you took as a salary and not on the $50,000 that you made in your business. So again, talk to your accountant or your tax professional. That's what we're here for, to help you sort through the nuances of owning a business that most people are not knowledgeable of unless they've had these experiences. So lastly, I encourage all of you to take a look at your business. Have you registered your business as an entity with your state? Do you have business insurance, errors and omissions insurance, general liability insurance? Taking that a step further, do you have adequate coverage in case something happens, in case a client decides to sue you? Do you have enough coverage so that you won't have to come out of pocket if things don't go your way? Do you have a business checking account? How are you keeping up with your invoices that you send to clients and your receipts for your expenses and things that you pay for? So let's talk about what's going on with your business. I want to make sure that we all start off on the right foot with our businesses and not get jammed up for something simply because we didn't know. So if your business is intact, if you have registered with the state, if you have insurance, your business checking account, all of that good stuff, let me know. At me on Instagram or Twitter. I'm at Nick Winston, NikkWinston, and let me know that your business is in order. If you haven't gotten your back office, as I call it, in order, then really take some time. And I hope you took some notes during this podcast and you have some action items that you need to handle after this. But make sure you do all of that today. Get your business in order because you will be glad that you did. So it might sound like a lot. It's really not. Just do it. Just do it and you'll thank yourself later. I'm going down this list of topics that I received from female entrepreneurs. I just would ask business owners, like, what do you want to talk about? What's important to you in your business? What is a pain point for you in your business? And so many people said accounting or finances or taxes. One lady told me that she wanted to know more about her credit, her personal credit, and how she can leverage that to grow her business. So I actually wrote a blog about how to improve your business and personal credit at the same time. It's online on my blog called The Virtual Coffee Break at nickwinston.com. But I think I'm going to do an episode about personal credit. And how it can help your business, but really just some tips and tricks that I've used over the years with my credit and even with friends and family who have come to me and wanted me to help them work on their score. So I'll share some of those things just so y'all know: credit cards and good debt, bad debt, budgeting, all that good stuff. So if you have a topic, again, send me an email, hello@nickwinston.com, or you can DM me on Instagram. I will tell you everything that you want to know. Um, I think that's enough for this podcast. It was a lot of information, a lot of accounting and finance jargon that I didn't want to send y'all brain in a frenzy on. So that is it for today. I am wrapping up this episode, and for the next 3 to 4 hours, I'm going to be running behind, I think, 42 second graders. I volunteered just like a working mama would, true working mama fashion. I volunteered to be one of the helpers for the end of the year second grade party. So I'm headed to my daughter's school. It's the last week of school after tomorrow. That is it. And I'm going to try to record an episode maybe once a week at least, just to get y'all the information y'all want and that y'all need. But again, I thank y'all for listening. I thank you for tuning in. Please share this episode with your friends, your business besties, and anybody else who needs some advice about small business taxes and how to take advantage of the deductions and the credits. I will say it one last time. If you have a question about accounting, if there's an episode you want me to talk about, a specific topic related to your business, send me an email, hello@nickwinston.com. That's NIKKWINSTON. I'm also on Instagram, Twitter, and Medium at Nick Winston, NIKKWINSTON. So thank you again. I appreciate you tuning in. I'm so happy to be recording this podcast for y'all. There's more to come. So until next time, y'all be good.